I see. The way I look at discipline is like a muscle. I'm sure most of you listening probably go to the gym or do something active, and it's like if you want to, not even a muscle, like any activity, if you want to get better at something, uh, you just gotta do it. You gotta literally repetition over repetition again and again and again and again. Like you didn't learn to read at 4 or 5 years old.
Welcome back, everyone, to This Week in Steady Trade. We have a special guest this week, Ben. I'm going to just point it right over to him and let him introduce himself. Who are you? Where are you in your journey? Let us know.
All right. So I started studying probably about a little over 2 years ago. And I'm 20, so I started when I was in high school off of my little E-Trade mobile on my app. So I would just watch it while I was at school all day and just be like wondering how everybody like Tim Sykes and Tim Grittani could capture all these crazy moves. So I just watch them on my phone, and that was actually like when Bitcoin was getting really hot. So I was seeing all these crazy 1,000% gainers. And literally all I did was put like $500 in my account, which at the time I thought was fine. And that's when commissions were a thing too. So that was definitely not okay. And eventually, so I guess tried to use that. And then eventually commissions ate me alive there. So then I restarted and started my first full year trading like on a laptop and actually like the right way in 2019. And then I started with I think I started with $1,000 account in my E-Trade and just kind of slowly ground that one down. And then eventually I met Jack here, and he was like, dude, you got to put more money in because it's hard. That's when commissions were still a thing. So it's hard to cover those commissions because if you have, $500,000 position, you make 10%, you pay $10 in commissions, that's already 10% of your profit. So it's just a, formula for disaster kind of there. So eventually then I started with a 7K account, and that was between two brokers. So I'm partially long bias and partially short bias. So that way I'm not just, wanting to buy everything or wanting to short everything. And so I have two separate accounts, and I have it split between the E-Trade and a Trade Zero account. And I've been to about break even and have found some profitability in a couple different strategies that I've learned so far.
Awesome, man.
Yeah.
Are you still, so you're still under PDT?
Yeah. It's at about 7,000 right now.
Gotcha.
Yep.
So we have a lot of questions, but before we get to them, how do you deal with PDT, right? Because like my experience with it, I was under PDT for like 2 years and I struggled with it. I broke PDT like once a month and I had to like keep rotating brokers. So I'm curious like how you do it.
Yeah, okay. So on my E-Trade, I only go long on that one, and it's actually set up for a cash account. Not really purposefully. I accidentally got flagged for the PDT twice, so they just made me go to cash. But I ended up making it work because what I'll do is on that one, I'll use like half of the account. So say like I'll use like $1,000 position one day, and then the next day I'll use like the other half of it, and then by the third day it'll be rotated. So that way it'll be, pretty much like no day trades, but I also can't just go all in and then go all in the next day. So I mean, there's a ways around it, but everything has its pros and cons, So the best thing I could say about that is just having, like a lot of people said, multiple brokers, or just having like a couple of cash accounts and a margin account if you're into short selling. So on my Trade Zero account, that one is margin, obviously, so that way I'm shorting on there. But yeah, so everything has its pros and cons, because with a cash account, like this has happened to me multiple times. So say if I get stubborn on a play or if I get emotional on one, I just want to keep on entering and entering and entering. And then I see that I'm out of buying power for the day, and then I miss the real A+ setup for the day, and then I have to sit there and watch on the sidelines. So it's tough, but there's different ways to mitigate around it.
Yeah, absolutely. I did something similar. I think once my account got to like 15,000 or so, I just put it, I was simply long biased. So I just put it all in E-Trade on a cash account. And then at that point, like you were saying, you can rotate it. So you have like 7.5K for me every other day. And I mean, you only have 7.5K, so once you use it, it's gone. But like you can take 2 or 3 trades in the day if you budget it right. That's what I did. So
Yeah, same here. Same here.
smart. Yeah.
Yeah, I want to second that with what Ben said about his 2 accounts, because that's exactly what I did. I had 2 margins accounts, but I had an E-Trade account and a Interactive Brokers account, and I only longed in the E-Trade account, so I had 3 longs throughout the week, and then at Interactive Brokers I only had 3 shorts. So it's kind of gave me that 6-day trades in the 5-day rolling period. 3 shorts, 3 longs, and generally I'd actually never broke PDT just because I'm a pretty conservative trader. I don't tend to overtrade, just naturally how I trade. So I found 6 trades being totally enough, but I could totally understand if, I've heard people open up 3 brokerage accounts. So splitting that is certainly a kind of a loophole to get around it for sure, and helped me a lot too. So
Yeah, for sure.
Mr. Kellogg, you started above PDT, right?
Yeah, I don't have too many things to add. When I was kind of just messing around in 2017, I did not have an account over PDT. But once I actually started my full-time journey and I started showing up every morning and sat there the entire day in 2018, I started with about 30,000. And in the year 2017, when I was studying, it was just a headache beyond or below the PDT. I remember one time I entered a small short position and I just didn't want to cover. So I just held it overnight and it just gapped up and it screwed me. And I was just like, this is so dumb. Like, I'm making decisions because of the PDT. So I'm just going to kind of grind out my valet job and save up enough money so I don't have to deal with this issue. And I'm just one of those traders that, I love getting in and out. And I don't like just sitting and holding small positions. I just physically can't do it. I'm the kind of trader that likes to just start in small and then just add into my position and take the fastest, easiest profits and kind of just be done with the stock and not just sit there and try to make multiple hundreds of percent, because that's what it kind of forces you to do below the PDT, because you need that trade that can significantly grow your account. So for me, I would rather just work and just study while you're under the PDT and just be able to save up enough. In my opinion, I don't have the personality for below the PDT, but I know many people that are very successful below the PDT. For instance, Kyle, I always looked up to because he was able to grow his 4,000 into above the PDT. And I think that is just exponentially great. That's just amazing. I don't think I would personally be able to do that.
Yeah. It was a grind. That's a good point. I want to maybe make a point of, if you are under the PDT, have perspective of where you're at, right? So if you're under PDT, just recognize either A, you can do what Jack did and study while saving up money, or B, you can continue to trade, but understand it's going to take a very long time for you to get it over PDT. I started under PDT, but I think it took me, from the moment I first started trading to learning to a year of losing, and then another year and a half of grinding over to PDT. So that's 2.5 years till I saw my account value over $25,000. So will it take you that long? Maybe not. It might take longer, might take shorter, but just have that perspective, wherever you are in terms of money, it's going to change how long your journey might take. Now I'm a more conservative trader. So even when I was under the PDT, I was taking smaller bets. You may be taking larger bets, but understand that, if you're going all in on a small account, you're just that more susceptible to blowing it up as well. So just everything about your account, how aggressive a trader you are, how much money you have, your time horizons that you're willing to trade, to commit to trading, all those things matter and take into account, or you need to take those into account, because that's going to, really judge your expectations. Now, if they're off, you're going to be disappointed when you don't cross PDT in 1 month because you thought it was going to be easy. You really have to kind of set that timeline, those goals that you want to get to, and how long it's going to take them. So.
For Ben and Kyle, question: are there lessons you think you've learned while being under PDT that have kind of carried with you, Kyle, where you are now, and Ben, how you currently trade? Are there actual lessons you think PDT teaches, or are you on more Jack's side where it's kind of just a hindrance?
You want me to go first, Kyle, or you?
Go ahead, Ben. You
okay. Start. All right. Well, I think personally it definitely enforces discipline a ton, because no matter what loophole you take, you're going to have to be extra disciplined. One, because you have to understand risk management, because you have to know that you can't just keep trying and trade. And then all of a sudden, if you're using $500,000 position each time, like you guys can, your account can afford that sort of down draw. But for someone that's a $5,000 account, you take, $100 loss 5 times in one day, that's 10% of your account gone just like that. So you have to be very aware of the risk management and of the discipline. So you have to be taking very ideal trades as much as possible and just grinding out the singles. And then if you get lucky, hit a double or a triple, maybe even a home run. And then I think that's one of the only ways that you can really get over PDT, starting with, a 10 grand or under account sort of thing like that. So it definitely has maybe much more disciplined, and it definitely puts me back down on my seat when I don't, follow that disciplinary rule.
Sweet. Kyle, anything to add?
Yeah, I 100% agree. The discipline part, I mean, the easiest way to say it is like the PDT molds you. Like it really does if you're there under long enough. And it definitely molded me. Perfect example is like, if you want to compare me and Jack, like, so he never had to deal with it as much as I did. So, even to this day, us trading, I know Jack takes probably like 2 or 3 times more trades than I do. Like, Jack, do you know how many trades you've taken on the year at all? Like, do you know a general number?
Dude, it's like 800 or 900.
Yeah, right. And I think I'm only around 200 or 300, right? And so now maybe I'm a little more naturally conservative anyway, but I know from being under the PDT for so long, it definitely molded me to be more disciplined in the respect that I literally am going to wait for, not so much the most ideal trade now because I am over PDT, but when I was under it, it was like, if this play didn't look picture perfect, right, I did not want to use a day trade, right? And I did that because I didn't want to make the same mistakes of trying to hold onto a stock longer than I should because I didn't want to waste a day trade. I wanted the day trade to be I wanted the setup to be so good that I was okay using a day trade on it, right? Because if you take a day trade on something you didn't even like in the first place, and then it goes against you, all of a sudden you're like, oh, but I don't want to waste this day trade, So before I ever took a trade when I was under PDT, I always asked myself, was this trade worth a day trade, right? Because if it wasn't, I wasn't taking it. If it was, then I knew I'd be 100% okay stopping out. So that's why I never had to necessarily, from a mental side, deal with that problem of holding on to trades longer than I should because of PDT, because I never got in the first place if I wasn't okay using that day trade right then and there. That's pretty much the key lessons for me from that.
Nice. I like that. My PDT experience sucked. I absolutely hated it. I was under it for 2 years, and my biggest takeaway was, like, I did feel like it was a hindrance on my trading, and once I got over it, it was kind of game-changing for me. But now what I do is I keep my account just close enough to PDT to remind me of the pain. Like, if I lose, like, I withdraw my profits. So if I lose too much, then I'm under PDT again, and that's the last thing I want because it just took me so long to get over it. So that's my approach that's my takeaway from PDT.
Yeah, I like that. Yeah, that's pretty cool.
The StocksToTrade Twitter put out a tweet, and a lot of you guys responded to it, and I've taken some photos of the pictures. So we're going to go through them. Let's see if we can see that. All right, so the first question we're going to discuss is from Anthony Chen, and he says, if I have a small account, how much of your portfolio should go into one stock, minimum, maximum? I kind of take this as like, how much should you risk per trade? So we're gonna start with Ben. What do you do? What's your take on this?
I mean, I think it can be various of answers for that. So he's asking how much minimum / maximum. So maybe he's wondering, like, what kind of dollar size should I use per trade? And seems like he's asking, should I go all in or not, essentially? Because I've heard from, a lot of people, like, I'm sure you guys have heard that Roland Wolf, when he was growing his account, he just pretty much went all in on a lot of the hot sector plays. But going back to what Matt said, it definitely just comes back to risk. So I think whether you do like the Kelly criterion thing, whether you want to risk 2%, 3% of your account, have that max daily loss and say it's $100. And then ask yourself, is this trade worth $100? And can I make $200, $300, $400, $500 on this individual trade? So I guess for this instance, say if you have a $1,000 account and you want to risk $50 and you want to, so, if you want to make 10%, put in $500 and try to make at least, $50 from that. It's a 1-to-1 risk reward. but then you want to be aiming for the 20-30% gains off of that, so that way you lose. You make no more than you want to risk in that case. So I would say, yeah, I agree with Matt. Just mostly based on how much you want to risk.
Jackie, anything to add?
For my personal trading, I like to use 10% of my portfolio kind of as not as like I want to go in 10% every single time, but I want to either be around that number where I'm okay to go a little bit over that on my A+++. And if I'm trading something that's not super ideal, like I can go way under to just, at 1% of my account. But I like to use that 10% kind of as a ballpark range just to base my trade ideas off of if I think I'm taking enough size or not enough size based on that. But that's account over the PDT. For under the PDT, I would say that you really shouldn't use more than 50% in one trade. So if it does go to a zero, at least you'll still have, half your account. Because blowups are really just what you need to avoid in the beginning. You just want to be focusing on learning and not blowing up or not losing all your money, not getting highly stressed out at this stage. So
are you talking about like risking 10% of your account, or like say you have $100,000 account, you want to put $10,000 into the trade?
I want to put $10,000 into the trade.
Okay, that makes sense.
Yeah. So 10% buying power on a setup.
Okay,
just in ballpark range.
I gotcha. Kyle, you're the wizard in this category, I think.
So if you're watching, if you go to my YouTube channel, just search Kyle Williams Trading, you'll see my face as the profile. I think my most recent or second to most recent video is on risk management and how I personally manage my risk. And so what I did do extremely well under the PDT, not so much now because I've evolved and kind of take different approaches now, but under the PDT, I had used the 1% rule. So if I had a $5,000 account, I would risk $50 on a trade. Now, that doesn't mean my position size was $50. It means, if I bought a stock at 105 and I wanted to stop out at $1, I'd buy 1,000 shares because 5 cents on 1,000 shares is 50. Now, in terms of the dollar size that I would use, I never thought about it that way, but I did learn that over time on basically how I traded and how I manage risk and, would stop out on some of these trades, or how wide of a risk I would allow myself in terms of like prices on the stock. Now, it would always be $50, but I had learned that it was around 10 to 20% of my overall account in dollar size, right? So if I took a trade, so perfect example on that 105 to $1 example, I only bought 1,000 shares. So 1,000 shares at 105 is $150. So that's, $1,050. So that's what, 20% of my $5,000 account, right? That's generally how I found out that most of my position size were between 10, 20% of my account, 20 on the aggressive side, 10 on probably the more average range. But that's how I got about it. Just 1% of the account. And maybe that's why it took me so long to get over PDT, because I follow that 1% rule like so strictly. I never wanted to lose more than that. And, some people would argue you should go in bigger. Some people want to go in like roll, like you said, like Ben said, with Roll and Wolf, kind of going all in all the time. I'm not going to fight you, say you can't do that, because you can, but it's like at the same time, just understand when a trade goes against you and you blow up 25, 50, 75% of your account, that's going to be incredibly hard to grow that back. So I took the approach of risking 1%, knowing that I will likely never blow up my account because I would have to literally take 100 losses in a row, which is, the likelihood of that happening is very incredibly small. I'd rather do that, take that safe approach and consistent approach than trying to just get over PED quick. I'd rather get rich and profitable for sure than get rich and profitable in a short time frame and then blow it up later. So that's how I go about it.
Well said. Going along that, I think this is an important comment too. It wasn't a question, but Arson commented, you can't grow small accounts unless you go all in and know what you're doing. Do you we talked about Roland, that's how Roland did it, but is it really necessary then to go all in to grow your small account, or can you do it, slowly and use proper risk management along the way?
I'm a living example of I think I have never, when I was under PDT, I've never gone all in, ever, like ever. And I grew it. And like I said, it took me 2.5 years. So it's possible, right? You just have to have the right expectations of how long it might take you. You know, at the end of the day, I don't regret anything of how I grew over in the PDT. Like I said, how the PDT molded me to play safe and follow the 1% rule is the reason why I'm still around. You know, I think everyone here is an example of, or a story of someone who blew up their account, who just decided to go all in and was wrong. You know, I'm going to say this as humbly as I possibly can, but that's likely never going to happen to me because I literally follow my risk management system more than anything else. So to argue that, you know, you're not going to grow a small account because you don't go all in, like that's not my experience, at least. You know, you can go all in, but just when you level up, don't look back and be like, oh, it was worth it. That's all I gotta say. It's like I'm just a living example of not going all in has saved me and has steadily grown my account year over year. So that's just how I do it. Just gotta stay safe first.
I agree there with Kyle for sure. Definitely.
Yeah. So Ben, you think then, I mean, because you're living it right now, that with your account size, you can actually grow it and you don't actually have to go all in on every trade.
Yeah, 100%. I mean, especially in the kind of market that we've been in. Like this month, for example, has been my most consistent month yet. And like all my days, I usually use no more than $1,000 position. And all of my green days have been well over $100. And my biggest loss day was like 119, I think, this whole month. And so, yeah, just like Kyle, I'm trying to do that because for me personally, I'm sure how it was for Kyle as well, because you really need to think risk first. And that one time where you decide to go all in, you're just all over the place. You're not buying where you're supposed to buy. You're not selling where you're supposed to sell. It's very, very difficult to just go all in and be confident. And I think getting small, consistent gains over time, it just builds up confidence. And, you know, to get to your guys' level and to be a 6-7 figure trader, you need confidence going in every day, knowing that you are able to take money out of the market and put it into your pocket. So, yeah, you can definitely do it without going all
in. Yeah, that was extremely well said.
So. Ben made me think of a good point too. The only like maybe slightly justification of going all in on an account is your financial situation outside of your trading, right? So if I have $100,000 in the bank and I have a $10,000 account, like, you know, yeah, I could trade all $10,000 because I know I can refund that account 10 times, right? But if you have $5,000 to your name and that's all you have in your account, like I'll go back to what I said before in the first one, like there's no way you should be going all in. You know what I mean? But if you have 5, 10, 15 times that amount of money and you can refund that many times, like, yeah, you could do that. But like, just understand, regardless how much money you have, you're still being a reckless trader, trading all in no matter what. But just your outside financial situation also should be playing a role in something you need to consider as well. So,
yeah.
Sweet. We have a series of questions from Selena. So the first one is, which trade, profit or loss, had the biggest impact on each of our trading careers? And then what lessons did we take away from it? I can go first. Probably back in February, I talked about this with Sykes in a recent interview I had with him. I don't know what I was doing. I was like starting to be like pretty consistently profitable, or like I was for a while, but like I started seeing like some really good money. And then work, like Slack, the company, came along kind of in my niche, kind of not. I don't know what I was doing. I oversized. And then once I was down, I was like, no, like I'm right. Like I'm not going to cut this loss because I think I'm right. And I don't know, end of the day, I lost like $5,000 on that trade, which was like, I took in the beginning of the month. So like I started the month red like $5,000 and I dug myself out of the hole and made like $3 or $4 grand that month. But that loss still stings when I think about it. And like, having a loss that big, like it just comes back to risk. I don't want to blow up. I don't want to risk that much money. So that's a turning point in my career in terms of trades. We'll go down the line. Kyle, what about you?
Oh man. Yeah, I think I've taken probably over 1,100 trades now in my career. And I would love to be able to pinpoint one exact profit or loss. I guess I do have one. I talked about this at the conference when I had my speech. I got to 100K in profits, and one of the first huge mental shifts when I took a trade was when I dip bought FNMA on the same pattern that Grittani made, over 200K on in a day. That happened in February 2017. He didn't make 200K that day, but it was the same exact pattern on Fannie Mae, the same stock. And I dip bought 100 shares because that's how much I was trading with at the time. I only was trading 100 shares of stocks when I was just like really first started learning. And I made 25 cents on the bounce. So I made like $25 buying 100 shares. And that's back then, that's when commissions were $10 in, $10 out. So I made $5 on like this trade. But it was a huge realization because it made me realize I understood how to trade and profit from dip buying panics. And so that was a huge clicking point for me. That's really what allowed me to realize in terms of lessons, like I can be profitable if I just stick to a setup, right? Stop trying to guess where this is going, where that's going. Stop trying to say, oh, I want to be a long trader and a short trader. I want to trade everything. I want to do everything. In the very beginning, if you can just find a repeatable and predictable setup and you could trade that over and over and over again, you will be profitable, right? If it has an edge and you can prove it has an edge, whether you've seen other traders do it, whether you can trade it profitably, whether you've tracked it yourself and actually have the statistics on it, you're just so much in a better position to be profitable. And I guess that's the biggest. It was probably one of my smallest profits, being $5, but it was one of the biggest realizations for me of like how I'm going to get profitable. Right? You have to stick to a setup. If it's not a setup, you don't have a trade. That's just that.
I'm gonna go for two. So the first one I'm just going to briefly go over is my HEAR loss, which basically was still my biggest loss to date, $7,500. And it was when I just first started trading in May of 2018, and it wiped out all my profits on the year. And basically what I took away from that trade was that I was getting eat alive in commissions at a high net worth shorting broker to start off, and that I added to a loser and got too convicted in resistance. And it basically just made me realize that I need to start longing first, where the commissions are cheaper, it's easier to get in and out. And that's what I took from it. And then that's when my longing journey began, and I was able to grow my account to 6 figures doing that. And then once the longing kind of slowed down and I realized I reached my maximum in the longing market, and I just found that it was really hard for me to risk more than 1,000 going long. And like I went back to shorting, and this year, majority of my profits have been short, probably about 75%, I would say. And the trade where I really understood my style was APT and Codex when they went supernova. And I basically found how I like to size into these. And my risk management was just taking bigger size with tighter risk and proving to myself that I could stop out. Because me and Kyle were talking about this the other day, and we both said the higher odds risk level you choose, the more stubborn of a person you are. So I would say the higher odds when that risk level does come, that you might not stop out because you're already stubborn enough to risk that key level. And for me, I'd rather be in and out and getting a feel for the stock. And then once it's confirming, then I'm scaling in and having that tight stop loss. And once I found out how to trade like that on the short side, that's when I was able to use the shorting win percent and my conviction on shorts over longs to size in more. That's when my trading all kind of came together, and where this really exponential growth has came from.
Badass.
Yeah, I can't really think of any. I can think of a couple trades, like my biggest wins and losses, but I would say usually like I remember when I had my first green month, and I think it was either January or February of last year, 2019. It was only like $100, but I was like, I felt like super confident. It made me feel like finally, like I could, do it. Like I had a green month. I'm doing what 90% of people like cannot do. It's only $100, but for me at the time, that was amazing. Like kind of how Kyle said he had his first, the win, it was like $5, but it felt amazing. So I'd say that was for a profit. That was probably my biggest lesson. It just gave me conviction and made me want to keep going and keep trying and continue learning. And for my loss, I notice for me personally, what I tend to do when I am on a bad streak is I get super stubborn, and it's hard to cut losses, like as a lot of people also do. So, and those just teach me so many lessons, because then I'll look back at the end of the month and I'll look at my trades. I'll see, wow, like I just completely lost control, and then your confidence goes down. And so that's a big key lesson there, is just to control your stubbornness as best you can. And because it's really tough, especially being under a small account, to get that confidence that you need to really exponentially grow.
Good advice. Weird. What Jack said kind of resonated with me, because like I do that. Like if I choose a wider risk level that I think is more important, I am definitely much more stubborn to cut that loss at that level than if I have a really tight level and I just get out. So I just learned something, took something away there.
Yeah, agreed.
It blew my brain when me and Kyle were
It just
talking
blew my
about
brain as you were saying it.
Yeah.
I was like,
What
the
the?
less stubborn people are the ones who stop out the quickest.
Yeah.
And just using that mentality and then not being scared to scale into your winners, that is like the holy grail for trading for me personally. Because when I was risking the most key levels, I was the most stubborn trader out there. I did not want to stop out. And then when it does go through your risk, if you don't get out at a good price, you know, you potentially could add to your position to try to get out for break even, because you're like, you know, this is BS and all this stuff. So that's it. That's it.
Been there, done that, man. Absolutely.
That's it.
The next one from Selena is, if we had to start over with a small account, what's one pattern we would use to grow our account? For me, I think it would be OTC breakouts, because I mean, that's how I did it. So it helped get over PDT. They don't come around often, which is unfortunate, but when they do, those are the type of trades where you can actually get, like, with, you know, a lot of consistency, 30, 40, 50% winners, you know, while you're, you know, you make 10 times what you're risking on trade. That's where my focus would be. Kyle?
I get this question so often of new traders of like, what is the one count? I think the mistake that this question, I mean, Selena worded it very well, but I get this question a lot of, you know, what pattern did you learn when you first started, and will it work for me? Right. And I think people have to remember, I have no idea who you are. Right. Like, you know, it's great that we're reaching out and we can talk over the internet, but the reality is I maybe barely know your name. I don't know anything about you as a trader. So, you know, you have to understand, I'm telling you what I did, right? That doesn't mean it's going to work for you. Everyone is different. Maybe it will work for you. But for me, it's like, I learned dip buying panics. Now, in this current market environment, would I still be learning off that? I like to think I would, but this market also isn't showing panic dip buys nearly as much as when I learned them. Right? When I was learning them, they were happening at least once a week, if not once every other day. This market, I feel like we're maybe seeing it, at least in the OTC market, maybe once a week, at most once every 2 weeks. So they still do happen. You know, you just might not be able to trade that setup as often or as frequently. And the reason why I say that is just because that's the only setup I know how. That's my journey. I only know my journey. And so for me, I know I learned to be profitable on that one setup that started me to get the ground rolling. So to go back, that's still all I know. But again, you have to, there's a level of trust that you have to have in your learning curve that if you tinker enough and you test enough, you will find a pattern that works for you. But you have to keep looking. You have to keep discovering, right? Just because I tell you I learned dip buying doesn't mean you should just jump all in on dip buys. Like they really might not be for you. That's kind of a long-winded answer, but yeah, I only know how to dip buy panics when I first started. That's what I feel like I'd be doing now because it fits my personality best. So yeah, that's where I'd be.
No comment on this one for me. I would personally be focusing on OTC breakouts and OTC panic dip buys, both of what Matt and Kyle said. That's just my personality as well. And I just have such a large amount of information about OTCs in my head, because that's what I really focused on at the beginning. So that's what I've been studying for the longest. And I just liked the OTCs a little bit better because there's a little bit less volume, and there's a little bit less competition in the OTCs over the NASDAQs. So I think starting there would best suit a lot of people, not everybody. Some people could just be really good at identifying pre-market, low float NASDAQ news and growing their accounts that way. So like what Kyle said, you really just need to find out who you are, what style of trading you like. And if you don't know what style of trading you like, just slowly test everything, paper trade, trade small, and build a little spreadsheet and track your performance on the patterns. And kind of when you reach that 10 to 15 sample size, if you're winning 20 or 30% of the time, you can kind of throw that right away. Even if your risk reward's pretty good, that's just really hard with below the PDT if you're only winning 20 or 30% of the time. So try to find that one where you have your highest win percent and best risk reward.
All right, so I got a couple of things for this one since I kind of currently am in this position. I guess I'll start out with saying I usually only have two patterns that I trade that I find consistency with, being under PDT. And my long strategy is pretty much just like the first green day strategy. And for my criteria for that is I like to have a low float, preferably. Needs to have some sort of a catalyst, whether it's sector momentum or what's going on there, anything really. Very large volume, no resistance, and it's really good to know dilution and the filings, especially as a beginner, because you definitely don't want to be buying a spike and then you go in the filings and see them dumping 500 billion quadrillion shares right into where your buy was at. So that's what I use for, and those are unlisted stocks, by the way, to specify. So that's my listed longs. And then for those specific first green days, I like to look for technical analysis entries. So either a double bottom off of a whole $0.50 level for support. And then once you see the stock kind of, usually I like to see a fade out of the open because I don't like chasing at all. It's very poor risk reward. And then once you see a double bottom or a higher low, you have a very firm risk level and you just need to cut immediately if that goes. And I've found that tends to be, no more than 5 to 7% of where your ideal entry is. And if it works, you can easily make 10, 20, 30% if it's one of the good ones. So that's my one for longs. And that's pretty much just a gap and crab reversal. That's from Roland Wolf's DVD guide. But I do agree that the OTC breakouts is one of the best PDT patterns to learn because you usually don't have to use a day trade at all for that if they work really well. And then my short strategy is just either the first red day or overextended gap down. And those don't come around super often. And for those, I'm just focusing on the most volatile stocks that are just extremely extended, like Jack mentioned, APT, Codex. More recent ones are, INO was another one. More recent ones in March was APRN. And then GNUS was another one. So that's the short pattern that I look for. And I find that those have extremely high odds there.
The last question from her, we're going to reverse the order and go with Ben first. How and when did you learn discipline? Was it a process of trial and error or just Tim yelling at you?
Yeah, Tim's yelling definitely helped me to learn how to cut losses. But yeah, it was all the things that she mentioned. I mean, we all go through FOMO. We all go through random trades. We all go through not cutting losses. And to learn the discipline for me, it's just you just have to make the mistakes, honestly. Like for me, that's how it is. Because once like everyone says, no one's gonna know the stove's hot until you put your hand on it as a child. So even if it says red hot burning, you will burn your hand. I'll just stick my hand on there, see what happens. You're not gonna know until you do it. So yeah, I mean, I'm still learning discipline. I mean, I'm not over the PDT yet like you guys. So it's a journey every day, and it's constant battle. Sometimes it's harder than other days, but yeah, it's just always an evolving learning process for the discipline.
Jack, what about you? Are you a disciplined trader?
So yeah, for me, I had to learn cutting losses by holding on to that HER trading, adding my loser, and just breaking every single rule in the entire book. And basically then I was like, wow, Tim is right. Like cutting losses is literally the key. And then once I found a trading strategy and style that has tight risk levels, and I found how to add to my winners, that's when I was able to understand that I just love cutting losses now. Like the quicker I can get out of the trade, the better. Like if the trade's not working, get me out as soon as possible. I don't want to be fighting anything. And then I don't have to worry about cutting a big nasty loss because I'm cutting it when it's not working in my favor. Simple.
I see. So the way I look at discipline is like a muscle. I'm sure most of you listening probably go to the gym or do something active. And it's like, if you want to, not even a muscle, like any activity, if you want to get better at something, you just got to do it. You gotta literally repetition over repetition again and again and again and again. Like, you didn't learn to read at 4 or 5 years old, reading one word and be like, oh, I can read now. You have repeatedly practiced something over and over and over again. And it's like back to what Ben said about making those mistakes. Like making a mistake is a practice of discipline, right? Over and over again. So all those things, if you made a mistake, FOMOing into a trade, or taking a random trade, or cutting losses too quickly or too late, all those things over and over and over again should remind you how disciplined you have to be. And after 100, 200, 300 times, if you're not disciplined enough by then, you got to do something else. For me, it's repetition over and over and over again. You get pretty disciplined if you do it enough. So
Absolutely. I agree with everything you boys said. I mean, I still struggle with discipline too. I think it's something you have to like continuously work on. Using gym examples, like, you go to the gym for 3 months and then that one day you decide to sleep in, like you break that habit. Well, now sleeping in is that much easier the next time. So it's just something you have to continuously work on. And yeah, I mean, something I struggle with for sure.
That brought up another point for me when you were saying, if you went to the gym for 3 months and then you miss one workout, then you get off the wagon, I guess, right?
Yeah.
I think a key point there is, don't beat yourself up. Because I've been there where I've like gone to the gym a certain amount of time and there's one day that I miss for whatever reason, like life gets in the way, right? You can't go all the time. I think the best thing you can do is never beat yourself up to the point where you don't go again, right? So if you're on a really good discipline streak and all of a sudden you take a random trade and you take a loss, right? The best thing you can do is look at that trade in a positive light and be, okay, I screwed up. I took one undisciplined trade, but that's only one of the last 30 I've taken, right? That's a small little step back for the amount of good discipline I've had. Like, let's get right back on the track, right? Don't beat yourself up so much that you end up going backwards more than forwards, right? You only need to take one step back. You don't need to take 10 because you don't need to let one step back lead to 10, right? Just keep moving forward, keep going on, keep putting in those reps just because one rep didn't go the way you wanted.
So our last question for part one, we're moving into scaling, which Jack has mentioned a couple times. So I'm going to make him go first here, is from Jacob. He says, I hear a lot about scaling into your trades, and what is the best way to enter a trade for someone who's under PDT and can't scale? Also, so much difficulty right now for someone under PDT rules to short a stock that will collapse, but it blows past your risk. I mean, maybe Jack's not the best one here. He started over PDT. Let's go to Ben. Erase that. We're going to Ben.
All right. Okay.
How do you deal with scaling?
Thanks, Matt.
I got a couple things for this one because I personally scaling in and out, and I don't do it to neither extreme of like Jack does it, or someone like Nate. But being able to sell twice or 3 times was something that I would say changed my whole game around, because I was so like, I have to buy here and I have to sell here or else I waste a day trade pretty much. So I would say some ways around this are, one, having a cash account. You can do that because then there is no PDT for a cash account. You can buy 5 times and you can sell 5 times and you'll be fine the next day. Another thing is playing the broker game with this, because I know there's certain brokers that let you buy multiple times and sell multiple times as well. Like for instance, on E-Trade, I don't know if you have a margin. So if you buy once and sell 5 times, that's 1-day trade. But if you buy twice and sell once, that's 2-day trades. So you have to be careful of that with E-Trade. And I'm not sure if it's the same for other ones. But I know Trade Zero, since he's talking about shorting, and I think IB may be the same. Kyle, you can confirm on that here in a minute. But I know for Trade Zero, if I want to short 5 times, and if I want to cover 5 times, that can be 1 day trade. As long as you don't do short cover short, then you're at 2 day trades. So it's just you kind of have to play a broker game and know what type of account that you have.
Yep. Ben nailed it on the head there. I was just thinking in my head, know what broker you use, because how a broker determines what a day trade is different, right? In E-Trade, like you said, if you buy twice, sell once, that's 2. If you buy once, sell twice, it's still 1. But right, IB is just as much as it's just like Trade Zero, where you can buy 3 times and sell 3 times, and that would be 1 day trade. It's only when you start buying, selling, that you start getting into the scaling part where you would be flagged over PDT. In terms of, finding the best way to maybe do an all one in entry and all one in exit, this is why I gravitated a lot to OTCs, because they are very sensitive around the green level mark, right? A lot of NASDAQs can fake out green, go back red. I've seen like NASDAQ stocks cross red, green 10 different times. That drives me insane. Going to OTCs, there are many runners that almost never touch the red green level or never break it. Right. Perfect example right now, we're filming this on, what is it, the 24th of June. CYDY has ran like 4 days in a row and has not gone red yet. So if you are going long, you can risk red green, and you're stopping out right there, and you can risk that level. If I'm shorting, I really don't want to get short until that level breaks. Stocks like that are very, very predictable around that, such a great level of when it's red and when it's green, is very good, because it's just easier for someone under the PDT to know, okay, this is my 1 entry and this will be my 1 exit, right? You have your full trade plan laid out before you even enter the trade. You know when you're going to enter, you know when you're going to exit, and then you just let it play out from there. You don't need to play any games. Your sizing, your risk level. You just know, and you just enter. That's how I did it under PDT.
Yeah, perfect answers. You guys took the words right out of my mouth. We're ending part 1 here. If we didn't answer your questions, don't worry. We are filming part 2, and that'll come out next week. Also, if we didn't answer your specific questions, a lot of these are very similar, so we're trying to make sure we hit every question. So like this video and stay tuned for next week.